Chris from thetraderguy.com doing your weekly trade idea for June 3rd, the week of June 3rd, in the Forex markets. In front of you is the Euro US dollar. And this is a pair that, quite frankly, has been utterly choppy, pretty much lack of any real interest in it for months now. However, I looked around the Forex markets, and this was probably one of the more interesting setups. There are a few other ones out there that have caught my eye as well, but this is the one I'm going to focus on for this video. And on this chart, you can see I've got three lines plotted, and these lines represent some of the you that have been kind of hanging out in my forums and stuff for a while now probably recognize this is essentially a box trade. What we have is we have an area that has become consolidation. You can make a little bit of an argument for it back here. It was a little sloppy, but you can see that the area definitely has acted as consolidation before between the 128 and the 132 levels. In the middle of that is the 130 level, as you can see on this line here. And you'll see that a lot in these consolidation areas. You'll notice that the middle part of the consolidation area seems to attract price. And think about what that means and why that would be. Essentially, what happens is you get a market that goes back and forth, and you have traders who see the price fall down to the 128 level and they think it's too cheap. And on the other hand, you have traders who think that 132 is too expensive. So, what does that mean? That means 130 is fair value. That is roughly what the market thinks the euro is worth. We oscillate from time to time, obviously. We don't just hug the 130 level, but this explains why it's interesting. The people, why there's so much interest in it, because the people think, on the whole, that it's fair value. Now, looking at this chart, what's caught my attention is the fact that we have, and you'll see, I'll go ahead and box these out. You'll see that, oops, excuse me. You'll see that we have essentially the larger area, but you can break it down into two smaller consolidation zones. And we have just broken out of the bottom one, which means we're going to the top one. What I found interesting was the candlestick. I'll go ahead and zoom in now. The candlestick from Thursday blasted through the 130 handle. On Friday, we had an attempt to push that back, and that makes sense. There's obviously going to be some resistance up here, but we saw a pop, and the market closed, depending on the broker. The ones that are up until 5 saw it close, I believe, at about 1.3001 or so, right at the 130 level. Well, look at the shape of the candle. The candle is a hammer, and although most of the time we look for hammers at the bottom of a downtrend, this shows that the market did this over 2 days. It shot up from the bottom, blew through the resistance area, in this case 130, had a nice run higher, and then the second day fell drastically, but managed to close back above. So what does that tell you? That tells you that a lot of buyers stepped in, and in this case around 129.50. On top of that, what I also find interesting is the fact that we are right here at this blue moving average. This is the 50-day moving average. You can see it holds up quite nice in this pair. And now traders who use moving averages are suddenly interested. So you've got the nice large round number, which attracts a lot of people. You've got fair value. You've got the fact that we are sitting right on top of this moving average, and you've got the hammer. Now, most traders don't look at this specifically as fair value, but that's kind of how I've chosen to look at it in the longer term. And kind of like Bollinger Bands, that's why you're buying down here and selling up here. Now, granted, obviously, we'll break out of this larger consolidation area at one point or another. And when we do, that'll be a significant signal. But in the meantime, it looks to me like if we can get above the highs from the session either on Friday or Thursday, we more than likely will make an attempt to go back up to the 132 level. I don't expect it to be a smooth ride. I expect it to be quite choppy like it's been in the past, but quite frankly, I see nothing on this chart to suggest otherwise. A breakdown below the bottom of the hammer for the Friday session is very bearish. and more than likely would have us looking at 128. And speaking of 128, when you look at the charts from a longer term perspective, there is talk at this point in time about, see if I can figure exactly, a possible massive head and shoulders. We haven't destroyed that yet, but it's looking less and less likely. And also, when you, let me go ahead and get rid of the 50 here. When you look at this from a weekly perspective and even a monthly perspective, you can see that this area has offered support several times in the past, and that the area just below gives the market fits and starts. So it'll be interesting to see how this plays out. I expect more choppiness, but in the meantime, I think the next 200 pips are probably going to be to the upside.